Hello, everyone. Hello, hello, hello. Hello, happy Tech Week. Welcome to HSBC's headquarters here. If you have not made your way outside, we have a beautiful outdoor patio over there. So after this, when the bar reopens and the food's there, make sure you check it out. We got the perfect weather here for Tech Week. And so before we kick this off, I wanted to give a big shout out to the Tech Week team at Andreessen. I'm sure all of you, like myself, have been running around the city all week. And so big thank you to Shrikala, Tracy, Rose, and Mrs. Tech Week herself, Katya, for just being an amazing team and pulling this all together. Let's give a round of applause. And if you randomly get shushed during this, that's Katya. I'm sure she's running around somewhere shushing people. So that's what she's known for, besides Tech Week. I also just want to give a brief intro. I'm Mickey Swift. I'm HSBC Innovation Banking team. I'm part of our investor coverage team, which means I get to hang out with Andreessen all the time, and so I get to see firsthand what a cool company they are. So I wanted to, besides thanking the Tech Week team, I know we have our Capital Connect team here, Blake, Peter, Melissa, Yvonne. They really helped the whole tech community, as well as Kat Keegan and oh, there's Katya right there, snapping pictures, and Katie Nelson. So big thank you to everything. Andrew Chen does everything. I know there's a lot of early stage companies here, Speedrun and everything, and David Haber we're here from shortly. So big thank you to all of Andreessen for pulling this whole thing together this week. I have the pleasure of introducing HSBC's US CEO, Lisa. She's been a big supporter of everything we've been doing here at HSBC Innovation, working with the earliest companies in the world, like the Speedrun companies, and obviously with HSBC's platform growing and scaling alongside of them. So to kick this off, if everyone give a round of applause, and please welcome HSBC's US CEO, Lisa, to the stage.
It's so great. Thank you so much. I wanted to just welcome you all. This is absolutely awesome. I don't think I've been at an event where the stairs have been filled. So that is like, the energy in this room is outstanding. So I just wanted to say thank you from me. We're really thrilled to be kicking off Tech Week here at our Hudson Yards headquarters. Sorry about the 88-degree heat, but the bar's going to reopen after we're talking, so it'll be fine. A couple things. So I know this is Tech Week. There are 3 other events in the U.S., and so we're absolutely thrilled to be kicking it off here in New York. And you know, important about HSBC Innovation Banking, innovation isn't just a slogan. It's really a belief. It's something that we work really hard on. It's the way we want to reshape the future of finance. So we will be partnering with VCs and founders from here on. We will be harnessing technologies like AI. We just had a great chat about how we're using AI at our company. But it's the agility of a startup and the startup mentality combined with a $3.5 trillion financial institution that's been around for 160 years. So we kind of like that partnership. We think that's going to work great. So Innovation Banking has been around for 2 years. The company's been around for, by the way, our U.S. anniversary, 150 years here in the U.S., founded in San Francisco. So that's also relevant. Yeah, yay. But you know, a trusted growth partner. So the other thing is we just don't want to provide capital, but we want to provide ideas and insights. So please let us know if we're hopefully making you happy in that regard, or if there's something more that we can be doing. And I love talking about the U.S. U.S. is, you know, $26 trillion economy. It's a quarter of the world's GDP. But it's also the engine room for global innovation. So we're really excited to be here and helping you grow further and faster. And again, global reach, we're in almost 60 countries around the world. So as you build and grow and as you need help all over, count on us. So in a space that's moving fast, and we're moving faster than we're updating apps, I guess, we're excited about our next speaker knowing both the art and the science of innovation banking. So I'm going to hand it over to Dan Allred. Dan is, where are you, Dan? He might be at the bar. Or, oh, you're over there. Okay, all right, good. Just checking. So Dan brings more than 25 years of experience in the startup and fintech ecosystem. I don't know how that's physically possible, but okay. Including 2 decades at SVB, where he led the fintech team, banking 72% of the Forbes Fintech 50, and that's hard to say, but he's going to be moderating a panel of super engaging speakers, so we're excited for this conversation with these industry leaders who are shaping the future and are deeply immersed in the space. So they're not just observing the change, they're driving it. So we're excited about this. It's not just how AI is reshaping the landscape, but it's from customer experience to compliance and to infrastructure. We're going to hear from all of you. So thank you all for being here. We're excited for the panel. Thank you all, and we're happy to be here. Thanks.
All right, thank you. This is a great crowd. If there are people over there that are in the corner that want to come over here, there's a little bit more room over here. So come on over now if you want to do that. This is a great group and high energy, and we're going to deliver high energy on the panel here as well. So thank you, Lisa. Thanks, Andrees, and thanks, Fenwick and West, all of our partners here. We're excited for this discussion and excited to be joined by Dylan, by David, and by Andrew. So a notable investor in the fintech space and 2 founders and CEOs of great companies. So let's start with some intros. And what I would like to hear in your intro is not only what your name is and what company you're representing, that's the easy part, but what are you disrupting? And how are you making that part of the financial services ecosystem that you're disrupting better, both for clients and for your shareholders? Dylan, we'll start with you.
All right. Well, thanks everyone for coming. So my name is Dylan. I'm one of the co-founders and the CEO of Moment. And our mission at Moment is to automate the fixed income market. So for anyone who doesn't know, fixed income is the world's largest financial market. It's 50% larger than the global equities market. And yet it's just now going through the same electronic trading revolution that has automated and brought online every other major asset class over the last 20 to 30 years. And this is just now happening in the largest financial market. And it's a monumental shift because the order of magnitude we're talking about is like hundreds of trillions of dollars of notional being traded now on online and electronic platforms. The thing is, though, that the fixed income market, despite being massive and despite currently undergoing this huge electronic trading revolution, it's come online, but it's not yet automated. In fact, it's just as manual as it was before. It's kind of like if you get the internet and then all you get is email and you get nothing else. And so fundamentally, our mission at Moment is to automate the core workflows that fixed income traders, portfolio managers, risk managers, and financial advisors need in order to deliver an incredible experience to their clients. So that includes automating critical workflows like executing trades automatically, doing smart order routing, doing post-trade processing, but also doing things that simply weren't possible before, like building tax-optimized custom portfolios for users. And so those are the types of things that we do. We're about a 45-person company, an A16Z company. David led our Series A, and we're based here in the financial district.
All right. Let's go to Andrew next and hear about his disruption.
Skip over David.
These guys are the
We'll
real
come back to
disruptors.
it. Yeah, we'll come back to it.
So if you thought that was potentially really boring, what we do is even way more boring than that. So we focus in this really great sector called the mortgage servicing space. $11 trillion residential mortgage market in the United States. It's really government-backed. So for those of you who don't know, mortgages are part of the fixed income world, but mortgages specifically are instrumental in government policy because the vast majority of mortgages are either owned by the government or owned by government-affiliated entities. So Fannie Mae, Freddie Mac, Ginnie Mae, and there's a lot of sort of like government involvement in all of this. The reason this matters is because what has happened over the last 15, 20 years is a tremendous amount of regulation to protect consumers, also make sure that the market is running in the right way, and that has sort of trickled down in the form of really, really complicated human processes across the entire industry. And so the way to think about it, and the reason why this is interesting, is because you have this really, really important government tool and really important government piece of infrastructure that allows for effectively the way that Americans lead their lives and really live their lives, right? Which is buying a home and going through that entire process. You need a single source of truth. You need a system of record to kind of unify that and really effectuate public policy much more efficiently. So a really great example of this is when you look at what happened during COVID. Effectively, the government was like, hey, we have a really big problem. People are losing their jobs. They can't pay their mortgages. How are we going to deal with this? And the answer was, we're going to change regulations. These are a lot of government programs. We're going to try to put all these regulations and really put into effect all these plans for servicers of the mortgage industry to help homeowners. Well, herein lies the problem. There's not a really clean, authoritative source of truth, and there isn't a way to make sure that the plans are consistent and that it can be delivered electronically. And so this became a complete, utter, part of my language, clusterfuck, which basically resulted in everyone scrambling for multiple months. But at the end of the day, what you have to realize is the government is trying to help people, and there just isn't the technology to help them efficiently. And so what we're trying to do is unify that entire space and really put the best-in-class technology available so that homeowners get access to it, government regulators get access to it, the actual industry can benefit off of it, and obviously that results in a much more transparent space for all American homeowners.
All right, David, who are you and what are you disrupting?
Well, first off, thank you to Lisa, Mickey, and Dan for hosting us and being great partners. We do a lot of business with HSBC, and they're great partners to many of our portfolio companies, so thanks for supporting us in New York Tech Week. I'm David Haber, a general partner here in Andreessen. I joined the firm almost 4 years ago to help open our New York office. Many people don't know, but we now have about 100 full-time people in New York City. So we are all in on New York, like I know all of you are as well. I joined initially to do fintech investing. I now help lead our AI apps fund, so anything consumer, anything B2B. Fintech in many ways I view as sort of a horizontal across lots of different industries, which we may get into. We like to think we're disrupting the venture capital business. I think we look very different than a lot of other firms. We have 600 people across the entire organization today, about 75 investors. The vast majority of our headcount sit across our operating functions, which is a really important part of what we do in supporting our entrepreneurs and helping them be as successful as possible. So, we have a deep go-to-market team who builds relationships with firms like HSBC, a capital network team, which Mickey mentioned earlier, marketing, people practices, a bunch of other, again, really important functions and great people who make these guys, look amazing and, help accelerate their growth and success. So really great to be here and excited for the conversation.
All right, so it is New York Tech Week, and there's clearly a lot going on in New York that's obvious with the number of people that are here, but also it's something that makes sense, right? Of course there should be a lot of fintech happening in New York. The proximity to the incumbents in this city is significant, more significant here than anywhere. But would love to hear, how are you actually leveraging that? Where does that actually make a difference? So Dylan, maybe you can speak to that.
Yeah, at the end of the day, I think the vast majority of the customers we serve are not going to work with a company where not only can they not, meet in person with them, but go to their office. Essentially every major financial institution that we work with at some point in the process has been like, all right, I need to come to your office to see if you're a legit company.
Yeah.
And so, I think people also like the feel of a startup and stuff like that. There's a right balance. But that has been critical for us, both building those relationships over time, because when you're working with a financial institution, it's very rarely hey, we need this piece of software, we're going to choose someone over the next month, and that's it. It's often, months or even years of relationship building beforehand. So I can't really imagine us building this company anywhere else other than New York.
And David, you mentioned 100 people here. How are, you guys are obviously covering opportunities all over the world. How do you see New York, and how do you see it specifically relative to the fintech opportunity?
Yeah, look, I always say opportunities live between fields of expertise, and it's both kind of an investment philosophy. I think it's a metaphor in many ways for New York City. Technology has a tendency to cut across industries, and I think companies that are uniquely New York are those that live at the intersection of technology in one of the large incumbent markets here in the city. Obviously, financial services being probably the biggest large kind of incumbent industry, given this is sort of the financial epicenter of the world. I think a lot of what we've tried to do here in New York City is again, bridge that gap, right, between the kind of, the startups building on the frontier and, the scaled kind of incumbent institutions. And part of this came from, my own experience as an entrepreneur. I started a company back in 2013 called Bond Street, which was in the small business lending space. We ended up selling that business to Goldman Sachs in 2017. And so, navigating large financial institutions as an entrepreneur is really challenging. Trying to find the key decision maker really hard. And then from within, one of these large institutions, you realize that, it's not their job to necessarily know what's happening at the seed and Series A stage, right? They have 10,000 people that they're managing and a lot of other things going on. And so again, the ability to kind of convene and bring those communities together is something we've been trying to do, explicitly here in New York City. And so we, hosted great events like this with HSBC. We've also hosted dinners probably with, at this point, 36 CEOs, executive teams from many of the largest, banks, asset managers, insurance companies, and technology firms. Again, trying to sort of bridge the gap between our early stage founders and, the P&L owners, the division heads, the leadership teams at these companies. Really in helping them build what I would call like authentic, non-transactional relationships. So sitting, a seed stage founder next to the potential customer that they want to sell into. Super valuable for both sides, right? Again, it helps the large company understand what's coming, helps the startup potentially accelerate the go-to-market, and selfishly for us, we also invite prospective investments to join these meetings, and it's great to just sit and listen, right? And try to gauge like how acute is this problem that the entrepreneur is solving for their potential customer, and it's helped us come to conviction on deals. It's helped us win investments, and I think that opportunity is uniquely New York, given that many of your potential customers are here in the city, and again, to Dylan's point, like you want to be able to spend time with them and build those relationships.
That's great. All right, let's talk about AI. We're going to talk about AI a lot, so this will be the first of many topics that we hit on this broader topic. So, Andrew, I'm curious to hear from you, how are you guys leveraging AI? And interested both in terms of like, how are you leveraging it internally for productivity, for efficiency, for workflows, for whatever, but then also in your product. How are you embedding AI in the product in a way that makes a difference for your customers?
So I think like a lot of other companies, especially startups who really embody speed over anything else, right? We utilize it in coding. We're utilizing all the products that, as soon as they're released, whenever a new model is out, we're utilizing and we're testing it, we're seeing how it's advantage. When it comes to our underlying business model, what's really interesting is, look, at the end of the day, like what are LLMs, right? They're stochastic parrots, but it turns out human language and the way that we do work and the way that we have built skills is really similar to a stochastic parrot at the end of the day. And so what's really great is a lot of the work that we do as a company in terms of, a processor who looks at loan files or a specific workflow that needs to be, judged. All of that can be ultimately judged by an LLM. That could be done by an LLM. And so we integrate it a lot through our products, right? When it comes to, anything from like, hey, deciding which insurance policy am I supposed to be really looking at? Or like, hey, what does the actual loan file actually say? And like, let's make a, decision versus for A versus B. But ultimately for us, I think, we try to do a very good job of blending or sort of, holding both worlds constant, right? One is, hey, we want to be a startup, which means we need to be really thoughtful about how we're utilizing the latest and greatest technology. And then on the other hand, we work in a very, very regulated space, which, 15 years ago went through one of the biggest like financial collapses. And so we have to be very thoughtful about how we're approaching it, how auditable it is, all of those different things. And maybe the last thing I'll say, perhaps is like the most unique thing that we do, which is really that unique. But what's really interesting is we work in an industry where so much of the work that people do and the way that they go about things is it's a judgment call. It is a years of experience. It is a like something that people train themselves to do over whatever 5-10 years, right? Like the perfect example of this is underwriting. So when people think about loan underwriting, obviously there's a lot of calculations right at the end of the day, meaning DTI calculations, LTV calculations, collateral, the 5 C's of credit. There's a lot of ways to look at how to underwrite, and then people make a judgment call of why it's okay. There's scorecards, but there's a lot of judgment involved in it. And that judgment ultimately boils down to years of experience of seeing what worked or what didn't, and then coming up with an assessment based on that. What's really amazing about LLMs these days, more than anything else, is you can utilize that to kind of reverse engineer how someone thinks, right? Meaning if you have enough of a sample set, you can basically say, hey, let's take the LLM and let me actually look at the input data, the output results, and then let me reverse engineer how this person thinks about the world and what rules they generally follow, right? There's a little bit of hand waviness in it, of hey, this is roughly okay, this is roughly not okay, but there's some statistical truth to all of it. And so what's amazing about that is you can kind of imprint the decades of experience that some individual has had into the formulation of, effectively some sort of prompt, right? And then that can be utilized in the future. The most sort of cool, unique thing that we do with LLMs.
David, maybe specific to one of the things that Andrew spoke about, what are your, which was, this sort of pace of product development, what are your expectations when you're evaluating a company over a due diligence process, especially an early stage company, at how quickly the product is developing because of their use of AI?
That's a great question. I mean, ultimately, it's more art than science, I would say, when we're evaluating early stage teams, because really our, conviction lives at the individual, right? It's really backing amazing founders like these. But I think this moment, we're seeing companies, scale faster than we've ever seen, before. And I think part of it is, I think people's enthusiasm for AI and the willingness to experiment and adopt these new products. Part of it is the fact that we're in this sort of new paradigm where the software can actually do the work, right? I think that's a really fundamental shift from every other product cycle and technology that we've ever been in, right? Because if you think about it, the labor market is probably 100 times bigger than the software market. So you just take one, to broaden the aperture outside of financial services for a second, if you look at one subsector of the economy, just in the United States, right? Nurses. The US payroll for nurses is $600 billion, right? The global software market is $300 billion. So one subsegment, one job, just in the United States is twice the size of the global software market. We have this other company, again, not in financial services, called Hippocratic, that is basically playing the role of a nurse, calling you, not delivering care, but calling you the night before a procedure, making sure that you don't eat food before your colonoscopy or whatever. And it's the ability to do the work compliantly, 24/7 in 50 languages and, in all 50 states, I think is really unique. And again, the opportunity for companies like that to capture more of the labor budget as opposed to the software budget means that many of these companies are growing faster than we've ever seen.
That's great. Dylan, it's not all AI, right? What are some of the technologies and innovations you're sort of incorporating into your workflows and into your product?
Yeah, so we're not an AI company. Our job is to automate fixed income. And there are some things that can only be automated with an LLM. There are other things that can be automated with a for loop. And if you can automate it without an LLM, it's 20 times better to do it without an LLM. And I feel like in many ways there are similarities to my background, which is in quant trading and quant research, because you join one of these firms. So I was at Citadel beforehand, and I was coming out of college, and I was like, all right, cool. I was a math and stats major. I'm going to do all this cool machine learning research. It's no. I spent 95% of my time doing linear regressions because they're incredibly fast and incredibly explainable. And so from our perspective, we're just trying to think about, okay, how can we automate the core workflows that our customers are going through and enable them to do things that previously were not possible? And I think what we've often found is that in the process of those workflows, there's oftentimes one critical step that requires human intervention today that was not possible for us to automate before, that is now possible to automate with an LLM. Yep. And that's where we found it to be incredibly, incredibly effective, is things that we had already identified as great opportunities to automate, but there's one step in the middle of it that makes the process just not quite good enough for our customer to use. That's where we found a lot of success with it.
Yeah. there's so much promise here, but love to do like a little bit of a reality check. How much of this is like real serious opportunity versus sort of wishful thinking? David, as you guys are evaluating investment opportunities, how do you think about that, and what are some of the boundaries of, it all sounds great, but what are some of the boundaries of what's actually capable?
Yeah, I mean, my sort of mental model for this is like differentiation versus defensibility, right? I think AI is an incredible tool for differentiation, right? We talked about Hippocratic, like the voice agent, the ability to do that, again, in 50 languages, 24/7, highly differentiated. That technology alone, in my opinion, is not a source of defensibility. I think that's an ephemeral technology advantage. It's an amazing wedge to kind of, do the work and sort of wedge into a large company as a software provider. I think a lot of the sources of defensibility reside in things that have always been the case, which is, own the end-to-end workflow, become a system of record, have a network effect, become a platform. Like these were the heuristics that people like us would always sort of evaluate when looking at software companies. I don't think that's changed in this market. And so I think AI is an incredible, again, tool to wedge in, to actually do the work, often, do what was human-intensive sort of judgment-oriented work, and then backfill and sort of displace other kind of workflows and own, become the sort of platform that people rely on every day to do their day-to-day work. I also think we're just very early.
Yeah.
Right, in the adoption of these tools. Again, speaking about financial services specifically, this is one of the most human capital intensive industries on the planet, right? Really highly paid people living in Excel for the most part, doing fixed income, portfolio construction. Soon not so much, now that they're going to adopt Moment. Again, from my own experience being inside Goldman, whether it was legal, finance, risk, compliance, vendor onboarding, I mean, you could go down the categories in these institutions. Many folks weren't using enterprise software, let alone AI. And so I think there's massive opportunity for this technology to have a huge impact. And we're seeing the productivity gains in the engineering orgs, and every board is having this conversation because any CEO, any board member can plug a prompt into a model and intuitively understand the impact that it could have on their business. But the reality is we're still quite early in the evolution and the proliferation of the technology in big enterprise.
Andrew, what's your take? What are we going to see in the next 12 months versus what might we hope to see in the next 5 years?
From like a technology perspective, or from
in terms of what AI can accomplish.
In terms of what it can accomplish. So I would say there's a couple of different sort of dimensions, right? There's literally the ability for LLMs to solve confined harder problems. If you track, I think, any of the research that's going on, it's basically the rule of thumb is as long as you have a objective function that you can actually find, you can reinforcement learn almost anything. The problem is when you reinforcement learn that one thing too much, it's really just good for that one thing. And so I think from a ability to solve a problem, but a very clear confined problem, hey, I want to be really good at competition math problems, right? I want to be really good at the AMI, I want to be really good at the IMO, that you can do, it's a confined problem. But the second you're hey, but I also want you to do this other thing, then it kind of goes off track, right? And the generalized models themselves, there's a lot of data out there that allows them to be generally pretty smart, but to get the performance benchmark gains that I think a lot of people keep showing across different models, they're constantly playing this game of can I find the data, can I reinforcement learn, and there's a lot of policy optimizations or whatever else you can do throughout. What that I think functionally means is that in 12 months, I would probably hypothesize that most or 80 to 90% of things that we do as humans can be solvable with the right scaffolding with LLMs. That said, that caveat of saying the right scaffolding is a very, very big caveat because if you just look at how coding LLMs work today, right? It's there's a whole thing about how they're not great with large code bases. And my mental model of this is fundamentally think about it like a human brain, right? Because if you think about LLMs, they're ultimately transformers, which are built off of neural nets, and so a lot of similarities appear, which is to say, there's only so much context you can actually feed an LLM. There's your code base. Fantastic. But what about all those notes and all of those discussions that you had somewhere else? And you can keep trying to do this, but we as humans just have so much context that we've built up over the years, whether that be history, whether that be organizations, how people think about things. And so there's a limit, I think, functionally until people get to a place where I don't know, let's pick a crazy example, go with Neuralink and you plug in your brain and like you have all the fundamental context in there. But like until you get there, I think it's quite difficult to do it efficiently at scale. And so you'll see this like mixture of two effects, I think. One is the model's getting really, really good and scaffolding appearing and the model also improving at the same time. And then there's also this like reality of how efficiently can we actually digest it as like a society and like as companies, which I think is going to be the real barrier to people actually adopting it. Right? It's like I could have perfect LLMs and whatever else, but I still need to sell that product. I still need to get people to use that product. I still need to get people to adopt.
Yeah. Well, we'll see. We'll see how these things play out. Let's switch gears again. I think Lisa mentioned that we just released our Fintech report. Super proud of it. I would tell you that writing it, especially the section on exits, was kind of nerve-wracking over the last several months. In January, we're like, all right, this is finally the year. We're going to see liquidity. In February, we were sort of like, I don't know. I mean, market's getting kind of shaky here. By early April, we were like, no one's going public. And then in May, eToro went public. We were all watching Chime and Circle to see what happens. So it's a wild market. David, how are you thinking about exit opportunity and liquidity in 2025, especially in fintech?
I mean, it's a good question. I mean, Chime's going public next week. I hope that's worth, $1 gajillion because it'll be great. And I think it'll be a bellwether for a lot of other private capital behind many neobanks around the world. The reality is, like, I don't spend that much time on it, right? I help lead our early stage investing practice, doing seed and Series B, seed through Series B investing, and most of our conversations are like, how do we build products that people want and make sure that we're, building a healthy and kind of robust business with, hopefully, tens or hundreds of millions of dollars in revenue. Because I think if you can get to that scale, exit become very possible, right? You have lots of different paths that you can take, whether it's going public, whether it's, selling to a strategic, selling secondary, et cetera. So obviously, like, our job is to return capital to LPs, and so our growth team spends a lot more time kind of thinking about, time to liquidity and mark to market in our late stage portfolio. We'd love to see a more robust IPO window, obviously. But we're also trying to be patient, capital and great partners to our founders.
Andrew, Dylan, I'm sure neither one of you is trying to sell your company right now, but like, how do you think about this? And especially like as you're talking to other founders, it's been a long time without like real liquidity in the market, especially for fintech. So like, how do you think about the horizon for exiting? Less about your specific companies, more about the market in general.
Investors to get comfortable with, when I say investors, I mean really public investors to get comfortable with your business model and the fundamental properties. It just takes that much more time for them to like really get comfortable with it's a consistent, like well-regarded or like, consistently performing business. I think for people who built a business off of things that, the market just doesn't favor, you just have to realize that is the public market. And by the way, there's other markets or there's other businesses, not necessarily in fintech, which run the same sort of issue, right? Like oil and gas, like it's a cyclical business. At the end of the day, you go into public markets, this timing will matter a lot, and that's just the truth of it. For fintech businesses who are still pretty early on in their journey, I generally think about it as, hey, you probably have to take the vantage point of like, do you want to stay true or not even stay true, stay consistent with like your original business strategy, or do you want to look more like what the public markets want to look like, want you to look like? A great example, not to specifically talk about us, but we built a servicer originally, and we became 1% of the market. Seems like a great idea, and the margins are fantastic, the numbers are really great, and from just a pure financial perspective, you're like, well, the numbers here almost look like a software business. You have long recurring revenues, you have great margins. But it's also still at the end of the day a services business, right? And you can look at Palantir. Palantir did that really well. Didn't really get a favorable outlook from the public markets. Eventually decided to go into software. Now it's more of a software business. And so, you make the choices that you have to make to build the business that you want to build. And for us, in a very similar vein, we've decided we're going to go for the bigger opportunity. It probably also, comes along with higher valuations because it's a overall bigger TAM at the end of the day, right? And a more resilient business. And so that's the path we've chosen to go down. But I think you kind of just have to make that decision, right? It's like, do you want to look really good for public markets? And that's the thing that you want to do. And you can go build that type of business. Or do you want to just do what you've been doing all this time and kind of stick with it? And who cares what the public markets say? you built a great business. Your cash flows are your cash flows. That's what it is at the end of the day.
Yep, that's great. All right, final question. This went fast. Would love to hear from each of you. What's your strategic priority for the remainder of the year? I mean, again, acknowledging it has been kind of a crazy market over the last few months, and I don't know what the next 6 months look like. I don't know that I could have predicted the last few. But like, how are you thinking about strategic priorities, where you want to invest, whether that be time or capital, hiring, whatever it is? So Dylan, we'll start with you.
For me, it's just spending more time with our existing customers. The reason being, one of the reasons why financial services, I think, is such an exciting industry to build in is you can genuinely serve institutions that can partner to hundreds of millions of dollars in revenue that's driving to you and to them. Now, obviously, the downside of serving large financial services institutions is that, like, you don't know pain until you've gone through procurement at a bank. And so from our perspective, like, we are trying to build a business that builds core infrastructure for huge financial services institutions. And we've been lucky to already work with many of them as a small company. But the next thing for us is to make sure that we become the #1 software vendor that they work with, so that, you know, we're landing as part of the fixed income trading team, but the portfolio management team and the risk management team and the compliance team and the equities team and the lending team all want to work with us as well, because we need to show them that we are the #1 vendor that they work with. And so that's the thing we're focused on.
That's a good one. David.
Working with folks like these to help make their companies as successful as possible. It sounds cliche, but you know, I get a lot of energy by you know, again, working closely with them. I think many of my companies are in this sort of interesting inflection point, you know, crossing into, you know, significant revenues and now building out an executive team right beyond kind of the initial founders. Dylan was joking earlier that, you know, one of my lines that I repeat often is this notion of, you know, building a team of what I call safe hands. And, you know, as a founder, and I'm sure many folks who manage teams, you know, instinctively you know who are the people in your organization that you know you can delegate a project, you know, a business, a division to, and just know that it's going to get done with quality on time. You don't need to chase, you don't need to micromanage. It doesn't mean that they're going to not have questions, right? But they're going to raise their hand, they're going to be, you know, communicate, they're going to get the work done. And as a founder or as a manager, it's like one of the best feelings in the world to have a team of safe hands. And so, and it's not just, by the way, at the executive level. You know, in my experience at my last company, the most junior people at the company who were safe hands were amazing, and I would just fucking pour responsibility on them, right? And they became the leaders in the business. And so I love working with the entrepreneurs that I serve to help them build their teams and ensure that we have, you know, the right people in the right seats, because at the end of the day, companies are really just a collection of people that, you know, you have around the table, and I think talent is kind of at the core of that.
Andrew, you get the last word.
When it comes to our company specifically, I would say we're in integration hell because we're deploying software with clients, and so you're, you know, going down the feature list and going one by one and negotiating them and going through that process. And so that's a whole lot of fun. That means, you know, a lot of product development that we have to get done, a lot of road mapping, a lot of, you know, looking for additional hires. And so I'd say that's like a big focus right now in terms of my personal time. But aside from that, like, just trying to keep, you know, on top of whatever's going on in LLMs and AI land, just because I think it kind of changes every like week or two. A fun joke I've been, you know, telling some friends is when I used to work on the investment side, one of the fun things was, you know, you basically see the world change pretty rapidly, right? Macro news, there's always something happening across the world. But these days, there's more happening every single week in terms of LLMs than there are in the rest of the world. And so it's kind of fun to be in tech, but sort of see the world evolve at the speed at which, you know, you would see it evolve it when you were doing trading or something.
That's great. Thank you all. That was a really great panel. I mentioned the Fintech report. We're super proud of this. Would love for every single person here to QR code snapshot this, download the report. I think you will enjoy digging into it. You'll see themes there around convergence among established players in fintech. We'll speak to emerging trends in fintech, especially around embedded finance and embedded financial services, some of which are actually enabling non-financial services companies to deliver financial services. And then we'll talk about potential resurgence. I won't say potential. We'll talk about resurgence in the exit markets as well. So please check it out and provide your feedback. Would love that. And I will also just once again say thank you to Andreessen Horowitz, thank you to our friends at Fenwick, and thank you to Lisa and to the HSBC team for making this possible. Stick around. We've got drinks, we've got snacks, and obviously a lot of great company here. So look forward to spending some time with you over the course of the rest of the evening. Thanks.